Good afternoon, everybody. I think today is Wednesday, right? Yeah, today is Wednesday. Market very muted today. S&Ps are trading up near their high of the day, up about 16 points right now. The Dow has been up. NASDAQ just turned positive for the day. But overall, very, very light volume. I think the market is really taking into account what happened yesterday, especially in the semi space with that ASML news. Charlie was on yesterday, talked about that quite a bit. The semis kind of taking a breather today. I mean, they're on their heels a little bit. Not a lot of follow through, but you know what? We'll have to see what happens because tomorrow morning we get a big earnings report, Taiwan Semi, TSM. And that is going to really maybe set the course for what happens further, because not necessarily what their results are, and I'm going to bring up a chart here, not necessarily what the results are, but what are they going to say about guidance, especially relative to what ASML came out with yesterday. So that's what the market is kind of waiting on, and I think that we are going to really kind of hold back until we see that, and that can be a huge market mover, guys. If they come out with some guidance or rhetoric commentary that what ASML said yesterday about their production and shipping those chips, if it's not negative, we could see a big rally back in the semi space. But who knows what's going to happen? Personally, I like Taiwan Semi. I was on Charles Schwab Network this morning. Excuse me, I talked about it and I gave a pretty bullish outlook for it, but anything can happen, obviously. Otherwise, what's going on in the marketplace today? Banks continuing their run. Morgan Stanley came out with some really, really positive numbers, positive guidance. So banks are continuing their run. Coinbase, there's been a massive amount of out of the money call buying today in Coinbase. I'll bring up exactly what we're seeing here. But so far, we're seeing about a 5-to-1. I'll bring this up here. A 5-to-1. Come on. There we go. 5-to-1 call versus put ratio today here. So, we're seeing Bitcoin, back to above 67,000. Does that mean 70,000 is the next stop? We know how correlated Bitcoin and Coinbase are, but there has been just a massive amount. And let me actually get the exact data here because I saw it flow through before. And it was, hang on with me here, guys. Okay, at the 500 strike. Okay, so these are out to 2026. Let me bring these up here. Okay, we talk about out of the money. These are about as out of the money as you get here. So these are the January 2026. Okay, and look at, hang on, let's get down to the 500 strike. Here they are. 1,100 of those were bought today. Okay, I mean, that's, I don't think I want to have that holding out there personally for a little over a year. Okay, that's not something I would personally do. And then NVIDIA, the call buyers are back after yesterday's big dip in the stock, and NVIDIA is rallying back today. We're seeing a lot of the November 15th expiration, those calls being bought. So anywhere through like the 132 up to 140. So if we look right here, guys, here are those 132s that I'm talking about. Almost 15,000 of those. So many out of the money calls being bought here. And then even, I mean, these are pretty short term. These are 1 month out. And I'm looking at my data here. If we go out to February, next February, the 250 that be right? No, not the 250. No, that was the amount. The 120 strike calls. There we go. So those are actually pretty deep in the money. We're seeing 500 of those were bought. And then if we go out to, yeah, that's about it. That's actually December. That's the other one. So December, only a couple months out, we are seeing the 140 strike calls there in NVIDIA today being very, very active. Let's get down to the 140s. There we go. And actually, it's not just the 140s there. If we kind of look at this whole complex here between 130 up to 145, we're seeing some pretty big activity there. So, was yesterday a one-off? Was yesterday an anomaly with ASML? I don't know. We'll see. So I just wanted to bring this all to everybody here. And how's everybody doing today? And of course, I see all the me's in there already. But if you want to get entered into our spin the wheel for later on today, folks, please put a me in there. Don't get left out. We will do that at the end today. Also, if you have any questions about anything, of course, please put those in as well. Something I want to talk about, which we have touched on VIX before. We've talked about, excuse me, guys, still can't get rid of this darn cough I've had since I've had out here. Thank you, Richard. We've talked about VIX. We've talked about how VIX futures work, okay? And what I want to show you right here, and I'll put up the link in here, everybody, but what I want to show you is a typical looking VIX futures curve. Okay, and this comes right from the CBOE website. Okay, and in fact, again, let me put this link right here in our chat. And this is on their website, and what this does is shows term structure, the VIX futures going out on time. Okay, so we can see basically this continuing upward looking, sloping looking curve here, meaning that futures are higher the further you go out in time. And if I scroll down here, it gets pretty flat, but you can see here's the futures expirations and here are the VIX values. So just very gradually upward sloping. Does everybody see that? Okay, and this is a normal looking futures curve. This is a normal looking futures curve, whether we're looking at the VIX or any other sort of commodity product, oil, gold, whatever it might be, where futures prices typically are higher than the current prices are. And that is a state called contango. Okay, that is a state called contango. Contango happens in a futures product typically 80 to 85% of the time, where you see that upward sloping curve. Now, the great thing about this chart, and I just posted up that link there, guys, is this allows us to isolate any time frame we want and see what the VIX futures curve look like. So I'm going to go back a couple months here, and I'm going to go back to August 5th. You guys all remember August 5th, right? And what do we see here? What happened here? What completely shifted, not just in VIX futures, but completely shifted in the marketplace on August 5th? Okay, and then show you again. Let's go back to March of 2020. Okay, what happened in March of 2020, guys? Come on, give me March. We'll put in March 26th, towards the end of the month there. Okay, look at that. That same downward sloping curve. Does everybody see that? So what happened here, guys? March of 2020. And what happened in August of 2024? Someone just mentioned the bank failures. I believe that was March of last year. So let's take a look. Let's take a look what the VIX futures complex looked like in March of 2024. Okay, must not have been, I'm sorry, it wasn't March of 2024, it was March of 2023. That's why we're not seeing that curve look like I thought it would. And maybe let's go to April of 2023. Nope, we'll have to figure that out. We'll have to figure exactly when that was. But when you saw those inversions, what happened? What happened to the market in those times? Yeah, we had COVID back March of 2020. We had the Japanese yen debacle, the carry trade back in August of this year. Let's go back. Who can think of another time when the market really, really sold off? No, Robert, it's not a bear market. That's not what this is telling us at all. Nope, this won't go back to that. No data. Oh, that's why, because it's a Saturday. Come on. VIX doesn't trade on Saturday. Okay, here it's a little bit flatter. But let's go back to August of this year. Okay? Let's go back to August of this year. Boy, I wish I was better on my mouse. That would really be nice. Okay, here's August 5th. Okay, so when these events happen, when we see that inversion, or what is called specifically backwardation, okay, where the futures curve basically flips, where the spot, or what's known as the near term or the spot value, and we're using spot VIX right now, is higher than the value going out in the future. What does that represent? It does not represent a bull or a bear market. Okay? It means that something is happening in the market that has spooked the market. And investors, retail, whomever it is, okay, are looking for immediate protection. Looking for immediate protection. So all of a sudden, just like if you think about an earnings play, a stock with an earnings play, what happens as we get closer and closer to earnings? Excuse me. What happens? Volatility increases big time, right? For that closest dated option that is going to be affected by earnings, because there's where the uncertainty is. There's where the unknown is. Same thing happens with the VIX futures curve. Okay, does that make sense to everybody? And again, going back, I know I mentioned the spot price. So if you hear someone talk about the spot price of something, that is what the current price is for, let's say, immediate delivery, if you're talking about a commodity. Okay, and in the case of VIX, when we look at a normal VIX chain like we would do here, and we see this price right here of 20.05 here in the VIX, that is the current or the spot price. Okay, but if we go back to our chart on the CBOE website here, let me get to, here we go. Okay, here is current data for the VIX futures complex. So we see that spot at 2008. But then all of a sudden we see this jump here. And then it starts to decline again. So why are we seeing a curve that kind of looks like this? We're seeing that because of the election. Okay, so just again, like volatility increases ahead of an earnings report, volatility increases maybe ahead of a Fed meeting, ahead of a big eco data report, maybe the jobs report, whatever it might be, that near-term volatility, that's because people are willing to pay more for immediate or short-term, near-term protection than they are in the future. They're more worried about what is going to happen right now than down in the future. Okay, does that make sense to everybody? Don, what's the question mark? Give me a question, if you will. Give me a question, because I'm not sure. Okay, yes, sorry about that. So John Gebhardt, in times of war, bank crisis, potential market crash, yes, short-term protection and backwardation. Yes, now, we know that the VIX can be a very contrarian indicator. Okay, when I look at the VIX, when the VIX is super, super, super cheap and there's a ton of complacency out there, that's a time to buy. Because if the VIX moves up, that means more volatility is coming into the marketplace. When the VIX is elevated, and elevated in the VIX is typically anything, 30, 35 or higher. Okay, typically that is a time to sell. It's a contrarian indicator. But again, if we go back to, let's just go back to August 5th here. Okay, look at how steep this curve is. Okay, so on August 5th, for example here, the August VIX future was trading almost up to 35. Okay, by the time we get out to November, it was down around 30. By the time we get out to January, about 27 or so. Okay, so everybody, not everybody, but the bias was buy that short-term protection. Now, let's see how quickly this curve moved its way back to normalcy. So let's put in a date here of August 9th, literally the end of that week. And look at that. So literally in a matter of days now, all of a sudden we're starting to see that VIX curve change back to normalcy. And here's 1 week later, and now it's really normal. What does that tell us? And this was just one instance, but we could go back in time, basically where any of these market events really drove the market lower. And we can see that VIX curve flipped from contango to backwardation and back. So that, again, the normal VIX curve, okay, we see the normal VIX curve in about 80-85% of the days traded. Exactly, Gene. Quick recovery. What this tells us is when we see these big, massive inversions or these big panic type of events, they don't last very long. They typically don't last very long whatsoever. Okay? In fact, let's again just I want to see how quickly, if we go back to the beginning of COVID here, this is March 26th of 2020. Okay? I don't know, I don't remember exactly what day the shutdown was or any, when the market really, really tanked. We can pull that up. This is March 26th of 2020. 1 month later, started to flatten. And by, I'm going to guess by May, okay, that one was a little longer because, boy, that wasn't just an isolated event of an earnings or the elections coming up in 2 weeks. That one was, who knows what's going to happen to the world, right? But even here with a literally once in a century event, it didn't take very long for the VIX futures curve to normalize. Okay, so how do you play that situation? How can you take advantage of selling that big pop and buying it down cheaper down the road? Just like we sometimes do in an equity where we sell that earnings expiration and buy something a week later, maybe 2 weeks later, that's a little bit cheaper, right? We do that often. We do that often. But why don't we ever, why don't we ever put on calendar or diagonal spreads in the VIX? Why is that? I'm going to ask everybody. The VIX is hungry, someone said. Okay, SPY is sold off a little bit while I'm waiting for those answers right here. And I'm going to put something up here while I'm waiting for some of those answers. We have a signal out in Crocs right now to actually buy a diagonal spread. Okay, Crocs is coming right down here, sitting at basically some pretty big support at the 50-day moving average. We have a signal out to buy a diagonal, meaning we are looking in this particular setup. We're selling November 1st options. We're buying November 15th options. We're trying to do that with different strikes, which is what makes it diagonal. But why couldn't we do that in VIX? What's the difference? Okay, so we have Kim. I like that answer the best. I don't know. That's a great answer. Someone said the VIX responds to current events too quickly for calendar style plays. No, I wouldn't say that's the reason. That's a good thought. It's not really the reason. Because of fixed expiration European style options, someone said. Yes, VIX are European style options, which means they cannot be exercised early. But that is not the reason for this. Okay, the reason, oh, there we go, Jeffrey. Thank you for putting up some data up there. The reason is when we're trading or putting on a position in an individual stock, regardless of the expiration that we use, the options are all tied to the same exact stock price. So in the instance of Crocs, regardless of what strategy we put on, every option that we would have in our position is tied to the same stock price. Right now it's 136.43. Whether it's November, December, next March, expiration, doesn't matter. Okay? But with the VIX and with other futures products, the option expirations are all tied to a different stock price, meaning they are tied to the futures for that expiration. So let's go back to let's get a live look here on VIX futures. So if we were to do something, okay, let's say we wanted to put on a time spread here, calendar spread, okay? And let's say we wanted to sell tomorrow's expiring, actually these are today's expiring VIX, and by the April. Okay? Well, how can we really calculate? How can we, if we're just putting a position on, calculate the value of one option against 2095 against the other option at 1881? The professionals do it. Traders down in the VIX pit do it. I have done it in the past. But it is very, very difficult to manage because of that possibility of backwardation. Okay? Because if we get into a situation, let's say post-election, things calm down a little bit, whatever it might be, and then all of a sudden, news, maybe geopolitical events, start creeping up again or whatever it might be, okay? Maybe the value of the option that we've sold that's tied to a shorter dated VIX, maybe that shorter dated VIX explodes because everybody wants that one. But the one that we own further out doesn't. Right? So when you have that disparity between the spot price and the futures price, it makes trading calendar, diagonal, or time spreads incredibly, incredibly difficult to manage. Does that make sense to everyone? So, kind of in sum here, what I would believe that we will see is this VIX futures curve, even though November is slightly higher here than going out, okay? Unless we have some big disruption in the world, in the market, in the US, if for whatever reason the election gets contested and it goes on and on and on and on and on, okay? We're gonna see this curve here, which is slightly inverted, slightly in backwardation. We're gonna see it normalize back to a curve like that. Okay, so what can affect, what can happen in the market where we could see a backwardation like this? Weather events, geopolitical events. One of the big things during COVID, besides the unknown of what the heck was going to happen, supply disruptions, right? So thank you. I appreciate that. I love doing these dailies. So thank you for that commentary. All right, guys, we have all of the entries in, I believe, for the wheel. Any last questions here on VIX, on backwardation, or quite frankly on anything here? Okay, and the Fed may hold rate. Yeah, so JKL, if everybody could see that, put out 6-7 things here, right? That are absolutely things in the marketplace that could disrupt the market. Middle East, right? Geopolitical tensions. The yen issue has not gone away forever. The China inflation issue, okay, we can add that in. I'm not sure that is as important, okay? And the Fed with rates, in addition to the election. And yet, the complacency, the panic out there is really not out there. To see a VIX of 18, which is historically high, 18, 19. Average VIX over the lifetime of the VIX has been right around 16, 17. We've seen it trade for a long, long time in the 11, 12 range. So to see the VIX trading in the high teens like it is right now, with all of these kind of hotbeds that are out there where one of these things, could make something happen, I think the VIX is pretty cheap, to be honest with you. My opinion, my humble opinion. So, all right, guys, you know what time it is. Let's see. Doesn't look like the wheel is as crowded as it was yesterday. I think it was more crowded yesterday, but there's our countdown, and let's get that thing spinning today. Oh, this is going to be George or Black Lion. Black Lion is the winner today. Black Lion, nicely done. Nicely done, as everybody knows. Please send me an email with your name, your address, and your size to prosperswag@prospertrading.com. All right? Please do that. There we go. And then, Mike, do we have any notes that we want to put up there? Because I am doing a webinar, live webinar tomorrow night. Okay, so if anybody wants to register for that, sign up for that, that'll be at 7 p.m. Central tomorrow night. Maybe I can get it right there. Oh, there we go. There we go. So anybody that wants to hop on tomorrow night, that would be awesome. Black Lion, again, send me an email with your name, your address, and the size that you wear, and we'll get you out some swag, maybe even something like this, what I am wearing. All right? Thank you, everybody. Appreciate you all being here today, and have a great rest of your trading day. We'll see you later on.